and welcome to In Focus. In this episode of In Focus, partnered by Virgin Money Australia, we're looking at the digitisation and evolution of mortgages in Australia, the key trends that are driving borrower trends, and what you need to know about what's happening in the year ahead. In the past 12 months, borrower demand has been off the charts, both for residential mortgages and business finance. And brokers and lenders have been busier than ever trying to keep up with that demand. The data that we've been seeing from Momentum Intelligence's Broker Pulse and third-party lending report have been showing us that brokers have been favouring the lenders that have been able to service loans quickly, efficiently and consistently. And the ones that have been really doing that month on month are the ones that brokers are choosing to introduce their customers to. A key part of that is having good tools, tech and support to help brokers write these loans remotely, which is increasingly important in a pandemic environment. So in this episode of In Focus, we're partnered with Virgin Money Australia and catching up with their head of distribution, Christian York, to find out what they've been up to help brokers achieve these loans remotely for clients in a pandemic environment. So thank you very much, Christian, for joining us. How are you doing?
I'm doing very well. Annie, thank you for having me.
Now, the fact that we're catching up like this distantly, you're in WA and I'm actually here in lockdown in Sydney, is a good example of how much we've changed the way that we work and operate since the pandemic hit. And I know that lenders and brokers also had to rapidly change their ways of working and offerings to adapt as well. Can you tell us a little bit about Virgin Money and what sort of changes you've seen evolve when it comes to mortgages and lending as a result of the pandemic?
Thanks, Annie. Yes, at Virgin Money, our ethos is to deliver great customer outcomes. What we found with the demand of customers and the demand of what they're looking for within the industry or what they're looking for their particular home loans is that we've seen a mix of everything from your first home buyers to your investment portfolio to your clients looking for a better deal. Searching at the moment is doing their life admin. What they found is that they've needed to revisit what they need and look for within their home loan, amongst other financial circumstances within their life. What we've been able to do is we've been able to create a way with a digital platform in order that gives customers the ability to deal with a bank that knows the changing of times and the evolution of where things are going. What we found is that having the backing of a Australian-owned bank, Bank of Queensland, with a strong liquidity position and fantastic balance sheet, we've been able to deliver fantastic customer outcomes as we pivot away from the traditional ways of working, which is your wet signatures, your documents that we tend to find from the traditional ways of working. We've been able to deliver some great enhancements for the Virgin Money proposition that really does create that enhancement to how we deliver that service to our customers.
Yeah, and you mentioned a whole range of key points there that I really want to sort of pick into in further detail. But I think what's really interesting to me as well is that looking at, as you say, you know, we've seen a different range of lender come through, whether it was sort of residential borrowers to begin with, and now increasingly seeing some investors. And I think just sort of looking more recently, have you seen any type of change in the type of lender or borrower coming to Virgin Money in recent months, for example?
Yeah, we have, Annie. I think what we found as well, especially with the COVID-19 pandemic, that was bound to impact Australians across the board and the way that we do work. As you made mention before, the fact that we're doing this from across the country via video, it's obviously evidence of the way things have changed within the ways of working. We've seen a massive shift of our portfolio and our composition as a mortgage lender around customers coming in for their first home. But what we have seen a lot is in the investment portfolio. We've seen a real shift in the way that customers are wanting to enhance and stabilise their financial position. And what we've seen at Virgin Money, due to the nature of the way we've evolved our business, we've seen an influx of clientele that's wanting to come through and focus on their investment portfolio. And that's actually seen north of 40% of our book that's gone through with the investment style. What we've also seen as well is fixed rates. Fixed rates have been such a common and exciting product for customers to take. We've needed to look at the stabilising of individuals' financial needs and the way that the market has changed so dramatically over the course of the last 12 to 18 months. Fixed rates has been really big on the radar across the industry, but what we have seen is our 2 and 3 year fix has taken up a lot of the portfolio shift within Virgin Money. What we found as well, something that Virgin Money has been able to do really well and set us apart, is that we've been able to identify customers and what they need within their financial circumstance to tailor a product that's going to be best suited to them. every individual is individual. They're unique, and every circumstance is completely different from somebody else's. So we've needed to look at the way that we enhance our proposition and deliver that to market. And that's what we believe we've done really well, which no doubt we'll talk about as we continue on.
Yes, because you have been through a huge amount of transformation, which we will delve into. But I think first, what I thought was really interesting is you're saying that, 40% of the book now investor, which is huge. And I think like that really comes down to the fact that because so many people are thinking, well, especially here in Sydney, I might not be able to buy a property that I can afford right now. And the house prices are going crazy, especially here. People are increasingly looking at maybe getting on the investment ladder and using the savings that they've had over the past 12 months to put towards a deposit in a more affordable area where they're not necessarily living. So I think that's a really interesting trend, and one that we've seen increasingly come through in the APRA and ABS stats as well, is this increasing amount of investor lending and people really wanting to get on the property ladder, whether that's in Brisbane, which I know has been super popular, over in WA where you are, or in Adelaide even, which I think has been one of the sort of quiet achievers. Adelaide and Tasmania, we've been seeing a lot of investor activity. I wonder though, obviously as Virgin Money partners a lot with brokers, what sort of trends are you seeing in broker introduced loans? Are they similar to what you're seeing across the book, a large sort of swathe of investors and fixed rates, or is it slightly different?
Yeah. So what we have seen, Annie, is that the fact that Virgin Money is driven by brokers. We're a broker-centric organisation. BOQ Group is a broker-centric organisation, but specifically with Virgin Money is that we don't have any bricks and mortar branches across the country. So a lot of our energy is ensuring that we are driving the best possible service proposition for our brokers, because the way that our clients come and get access to Virgin Money is via the broker channel predominantly. So that can help 98% of our clientele across our portfolio of mortgages is driven through our broker partners. So what we've been able to do is we've been able to focus solely on what that proposition looks like from a broker to their customers, which is obviously the introduction of customers to our portfolio. So what we do behind the scenes is that we do work tirelessly on every single avenue of the service and value chain to ensure that we don't just have a flashy platform. We don't just have a flashy name. What we need to have is substance and sustainability behind us in order to deliver those great customer outcomes. What we have done as well is that we focused on really listening to the broker partners on how we actually drive product composition within the book. And that's why with the brokers driving the investment proposition, we've been able to play very sharply, not just with rate. What we've been able to play sharply is rate, service delivery, but that SLA turnaround time, the overall proposition, which is seen if you compile both or all of them together, we've been able to see a full package proposition that's really resonated well in market.
Yeah, and I think that is so key, the SLAs, turnaround times, having that sort of, speed. And I know from having looked at the most recent broker pulse, Virgin Money, one of the few lenders that can actually turn a loan around in under a week, a few days now. So thank you for that. I guess many brokers will be very thankful that that's actually the case. And I wonder, just looking forward, we covered a little bit around the sort of trends that you've been seeing in market for the last sort of 6 to 12 months. What you expect future trends to be? Do you expect this investor appetite to continue moving forward?
Yeah, we do. It's hard to really articulate where the market's going to go because, as you know, and everybody else knows, it's such a fast evolving industry at the moment, and a lot of outside variables tend to change where the direction is going. So, what we believe is that we have seen a massive shift from your traditional variable clientele. We touched on before that fixed rates are such a dominant product in market where customers want certainty that the rate that they've got is going to continue for that period of time as their life evolves and changes. That life admin, and what a lot of customers are tending to do is looking at what that fixed rate can do and provide that sustainability for them, that assurance that they know that what they're currently paying now is going to continue on for that period of time. So we've seen a shift of customers coming in for that traditional variable product where they just want to see where the market goes, to customers really needing that security within their mortgage repayment so they know what's coming around the corner. We've seen a record low mortgage rates, which has played out, which has seen the rebound off the back of the pandemic that we have and currently still are experiencing. Many lenders already shifted their longer term fixed rates, as you can see from your 4 and 5 and your 3 years going up. It is one of those changes that is happening at the moment that we're keeping our finger on the pulse to ensure that we can still balance the needs of the customer, but the needs of the broker as well. Over the next 6 to 12 months, we should see and expect the market to move away from such high volumes of fixed rates and be more competitive in your variable position as well. So we are trying to balance the needs of the customer, but it is, as you can understand, trying to balance your overall portfolio is somewhat quite difficult at the moment.
Well, I think that fixed rate trend is really, really interesting. And we know from what the central bank has been doing, it's been sort of saying that it won't really see cash rate increases until sort of a couple of years' time, 2023, 2024 even. So the expectation, I think, there is fixed rates for now really, really popular because people want to lock them in before they start rising in a few years' time. So it's interesting to see that trend. I wonder though, just looking at sort of what else has been going on, you mentioned earlier about having a good SLA, and a key part of that, I think, is having the good tech and tools to enable brokers to write mortgages more efficiently. What progress has been made at Virgin Money to digitise the mortgage process, and why have you chosen to do that?
Well, SLAs are a hot topic at the moment, and I think where brokers are the first ones to tell you is that rate isn't everything. As soon as we as lenders realise that we need to be able to deliver not just a great rate or a great product, we need to be able to deliver great service. And where the industry has moved, which we touched on before, is that the traditional ways of working are now well and gone, or truly well and gone. What we've needed to do is evolve how we actually manage the value chain of a mortgage and what's our service delivery looking like to market. So there was a number of different things over the organisation that we need to look at and really do a deep dive to understand, is this going to make effect and change for the positive for the broker as well as our customers introduced via the broker. So what we need to do is we need to start at the very front of our processing and work all the way through to really deliver and hone in on what does our service proposition stand for in market. Not just churning out mortgages. We wanted to deliver that true service experience that customers turn around and go, wow, that actually was incredibly easy to do such a large piece of their life with obviously managing a mortgage or achieving a mortgage for a home. So what we did at the start is that we looked at what's our delivery, not just with timing, but what's our delivery with how our experience is with brokers coming to Virgin Money. The first thing we need to pivot during the pandemic, which was timely, is that we need to look at the way that the digital signatures were happening. As soon as you start locking up states and individuals are more restricted to where they can and where they can't go, they need access to how they actually can operate with this life admin inside their homes. So what we did, and we were quite fast and moving with this, is that we need to get away with the old traditional wet signature and the witnessing side of things. We looked at our policy and need to evolve and change that. So we brought in a document signing tool, which gives all consumers and customers the option to actually sign their documents electronically. We then also looked at the ID. So obviously we have to go through the ID process as brokers do with their customers and customers with the lender. So what we need to ensure is that we could deliver that ID process, which is a risk lens for all of us, and an obligation that we need to continue on with. We need to make sure that was easy for the customer, which we did. We looked at the way that the broker was able to ID that customer digitally for Virgin Money. We then also need to look at, that's all well and good having fancy tools and processes that you can get the application through the door, but what we need to do is that once we have that, how do we deliver that service back to the broker and the customer? So we looked at picking apart the mortgage processing sequencing, and we're looking apart on where are we making delays in the process that aren't the best possible outcome for that customer and broker. So we went through all of that from FTE capacity. We went through the way that our digital process was going through our platforms. We looked at all our partners that were feeding into that proposition for Virgin Money with our mortgage sequencing. And then we looked at ways on how we can really change that. So one of the benefits that came from that was self-service. So we spoke to the ID process. We spoke about making it easy with documents being signed electronically. What we needed to do as well is create a self-service model that was quick and easy for brokers to access customer information, but the information about the home loan. And that's when we launched our broker portal. The broker portal gives you a one-stop shop that can give you your pricing, your escalations, your loan tracking, every bit of information about policy or process for your clients that you're introducing to Virgin Money.
Yeah, it's really exciting. There's a huge amount of change there. And I know that, there's been a huge amount of focus on, well, how can we improve what the mortgage process has been traditionally for the last sort of, 20 years. It hasn't really changed that much in terms of what you actually need to provide. Whereas within a matter of 18 months, as you mentioned, seeing digital signatures being accepted, seeing remote verification of identity being rolled out, some of the tech that's available now is just mind-blowing that you can actually do. And having those sort of things like broker portals and technology so you can actually track where the loan is as well is super important for brokers when they're on the move as well, constantly seeing different people and needing to ensure that they're able to keep track of where they are in the process. I wonder as well, I mean, digitisation is one thing, but we did see also Virgin Money sort of revamp and relaunch as a digital bank in the last year. I wonder, how has this sort of changed what Virgin Money was already doing? Is there anything sort of that brokers really need to know about what this means for them and for their customers now that Virgin Money is a digital bank?
Yeah, what we need to do, Annie, is that we need to get with the times. I think having such an amazing, incredible brand like Virgin Money that's backed by an incredible home, Australian grown Bank of Queensland with a position they're in, which is just fantastic on what we've seen across the group and the changes and the enhancements we've made. And what we need to really align is the two of having such an incredible brand like Virgin Money, an incredible bank like Bank of Queensland, but then obviously matching up our service delivery with what we want to do with a digital way forward. Lots of different lenders and different players are out there coming to the market with a digital play. But what is a digital play? And a digital play, when we look at it, is wanting to make sure that we make things simple for the customer to ensure they get a simple process, a product that they need that's best suited for their circumstances, but also really hone in on how can we do this, not just speeding things up, because you can speed things up and still have things go wrong. We want to make sure that there was a balance between delivering great customer outcomes with a speedy return for the customer as well as the broker, but also look into what does that digital play means. So what we did as well with our broker portal, which we touched on, is that we thought, well, what's the biggest challenge at the moment for brokers and customers? It's turnaround times, but it's also being able to get the information they need at a speedy time. So what we delivered is that one-stop stop with the broker portal from our digital platform to ensure that brokers can just log onto the platform. They can identify the information they're searching for without actually picking up the phone. Yes, I do believe that speaking to people is still such a valuable part of that value chain, but also time is, and also the way that you obtain information that you need. So with that information portal via our broker portal, that became a speed to market play for us that will give the brokers the opportunity to take away the time that they would sometime invest into phone calls or wait on call lines, etc. We made it so easy for brokers to go in via our digital platforms to get that information they need. What you will see as well, that's just the start. So I touched on the pricing tool, live pricing for the broker and the customers that are coming through, our escalation process, providing more information to the broker, which takes away that reactive need for the broker to actually chase down the lender. We should be servicing our brokers and customers and providing information on what they need from a proactive point of view, which is what we're doing with our updates as far as our back channel messaging, our live emails to brokers around their applications and the status of them. We also then looked into how can we make access to our proposition and service delivery easy to be able to explain, hence why we've opened up all the policy. That's nice and easy for brokers to view on their mobile device, their iPad, whatever device they tend to use across the board. We've now enhanced that to actually suit the broker that's using it. So that's just the start. There's a lot of things in the pipe that I'd love to tell you now, but we'll just have to wait and see as they evolve.
I wonder if there's a broker listening who thinks this all sounds amazing, I'd love to take advantage, but they haven't yet written a Virgin Money mortgage. What sort of things they need to know before actually coming to the bank and writing a mortgage with you?
Yeah, so we'd love to partner with all brokers across Australia, and what we want to and what we do need is that first point of contact is to speak to your aggregator as well as your local Virgin Money BDM to get accredited. We want to get you up to speed with all the exciting things that we're talking about today that Virgin Money has developed, changed, and evolved during the journey since obviously inception of Virgin Money into the market. There's lots of exciting things that are happening at the moment, which I have touched on a few, but it's going to continue to change and evolve as we continue on in that journey of becoming an incredible lender that obviously makes sure the customer gets the outcomes they need. So what I would suggest is making contact with your Virgin Money BDM first and your aggregator to get accredited. We can then just walk you through what's changed in the last year, which has been huge, and we can get you up to speed with all things that your customers will need when dealing with Virgin Money. We've got lots of exciting things from the way that we've rolled out a new banking suite from our digital platforms, the way our policy is structured, the way that our localized BDMs across the country are focusing in on their markets, and then what we can do to deliver great outcomes for yourself as brokers, but also what we need to do for your customers moving forward. So please make sure you get in contact with your Virgin Money BDM across the country, which is on our website.
Perfect. Well, if you have any questions for Christian or for me, then do feel free to email them in. I'll pass them on to him. You can reach me at editor@theadvisor.com.au, and do check out the Virgin Money website and broker portal for more information on the products and broker services, as Christian's already mentioned. Thank you so much, Christian, for partnering with us today for the In Focus video and sharing some of the trends that Virgin Money's been seeing and what brokers need to know about the new digital bank. And I hope you stay safe and well, and good luck unpacking your new home in WA. You can see the shelves looking a little bit bare. Hopefully you'll be able to go to the shop soon and get all the things you need to furnish the house. Thank you so much for joining us for this episode of In Focus, partnered by Virgin Money, and I hope you all stay safe and stay well.